Hey folks, welcome back. It is a little late, but this is our May 2023 update for our investing passive asset allocation model, the ATM system. Let's go over our results for the month. All right, this is definitely late. We're at June 24th right now, so it's going to be about a week or so, and going to be getting out the June numbers. But this is our results for May. Every month we want to update you on our results for our ATM system. That's the asymmetric trade management approach. And again, just a quick overview of this system. We're sort of known for our live trading room where we trade every single day, day trades, weekly trades, monthly trades. This is not trading, this is investing. This is an approach where we said, hey, we want to build out a dual fold mandate. Number one, we want to set a goal to beat the S&P 500 on a year in, year out basis. And number two, we want to do it at less risk. And we measure risk via standard deviation, how much our accounts fluctuate in value. So that was sort of the genesis of the ATM, the asymmetric trade management approach. It was a place where we could say, hey, I know that it's not prudent to take all of my money and put it into a trading account. I want to look at something that's more long-term investment, passive oriented, that is growth focused on building sort of generational wealth, if you will. So this is our passive investing approach, very different than our live trading room. So again, it is investing, not trading. It's passive in nature. It works with IRA accounts. It works with non-IRA accounts. It just takes 5 minutes a day. We have 1 to approximately 10 portfolio adjustments that we do every morning as we start out our day. And again, there's no trading, there's no watching your accounts, there's no monitoring it. You put those 5 minutes in the morning to get your adjustments and you're done for the day. Dual fold mandate, beat the S&P 500, do it at less risk. That's our goal. Results are tracked based on net liquidation changes. So we track our results here with this program, not on wins and losses, not on anything like we necessarily would do in our live trading room. We just do it on net liq changes. Is the account value going up or down, and by how much? Pretty straightforward. It is a hedge fund aspect. We hold short and long positions inside of there. So people a lot of times will ask, well, what if a market crashes? We're not all long in our portfolio. So we actually trade to the short side as well as the long side. We focus heavily on non-equity correlation using uncorrelated strategies with uncorrelated markets. So we trade different markets so that if the Dow goes up and down by 1,000 points in a day, it doesn't necessarily affect us like it would a normal investment account. We have 4 main strategy components that we use. We have short positions that we cash flow. We have long positions that we cash flow. We have credit strangles that we use to generate and initiate the cash flow positions. So we get into short positions and long positions through credit strangles. And then we have also what we call an anchor position, which is a leap covered right. It's usually on the SPY. And it's a long or a short position based on our 12 technical indicators that we look at that give us bullish, bearish, or neutral strategy orientation. We do use non-equity correlation, so we trade crypto, nat gas, oil, silver, bonds, copper, coal, uranium, lithium, coffee. We trade the U.S. indices, we trade foreign indices. So we are very broadly diversified through here. This is how we try to accomplish step number 2 of our dual fold mandate, which is beat the S&P at less risk, do it at less volatility. So we're pretty diversified from that standpoint. Performance update, I think we are still on track for amazing results through the month of May this year. If you look at, again, 2021, the market had an amazing year in 2021, up almost 27%. We crushed it in 2021 with almost a 55% return. Last year, 2022, was a horrible year for the market. Bear market for the market, down almost 20% on the year. We were up 22%. We actually outperformed the market better in 2022 percentage-wise. than we did in 2021. If you would have put $100,000 into the S&P last year, you would have only ended up with $80,000 at the end of the year. You put $100,000 in our asset allocation model, you would have had $122,000, $42,000 difference, 42% different result, 77% return in the last 2 years on our account. I've started with approximately a $25,000 account. I'm up to about $70,000 now. Where are we at year to date right now, and where are we at for the month of May? Well, here's some of our numbers. Here's some of our numbers that we look at. You can see that this has been month by month by month from January through May of this year. You can see side-by-side comparison with the ATM program versus the S&P 500. And you can see graphically how it has looked over this time frame. We really got hit in the month of May with the banking, the regional banks. We got a little overweighted there, and that pushed us down. We've since recovered a little bit of those, but it did definitely hurt us. You can see that we are up about 14.76% in April versus the market 8.65%, and then May we dropped down to 9.42% versus the market's 8.95%. So we are still beating the marketplace, although we're doing it with as much volatility, if not more, than the marketplace. You can see that we had a pretty big move there on the month of May, but again, the point being that we are still beating the market in terms of overall results. And I think that going forward for the rest of this year, obviously we're just a week or so away from the June update, and you'll see that the market just absolutely has surged in June through a lot of these AI stocks. And I think that we're really well positioned here going into the latter half of this year in terms of the probabilities of a market pulling back versus the probabilities of us pushing forward. We've said this all along with this approach to asset allocation and investing. It's very, very difficult when you are trying to incur less risk and less volatility than the overall market to beat the market when it's just doing nothing but shooting up by 4 and 5% a month. So it's likely that we will trail the market if it continues to push as it has, although I still feel like we have a really, really good shot of beating the overall market this year, but still very happy, very impressed with our results so far this year. I think if we can come in around our targeted average goal of around 30% a year, 20 to 30% a year, we will be able to hit our numbers and be pretty darn happy with that. So overall, again, pretty darn good month for us in May, even though we had to make a lot of adjustments with those regional banking stocks. Now, again, this is a asset allocation investing program. We have a whole different program for trading, and our trading program has been absolutely phenomenal. I think we have one of the best 0 DTE track records out there. We have the Millionaire Maker IWM trade with stock trades that are absolutely killing it. Our 4 DTE trade has averaged anywhere from 8 to 12% a week. We have scalping programs that we utilize. Our oil ladder has some of the highest ROI potentials of any of our trades that we do. Our in the money cover trades are unique setups that I think have one of the better Sharpe ratios, meaning best risk reward ratios. Our Theta Ferry trade has on average per contract that you do put an average of $20,000 of extra money or profits in our traders' pockets on a year in, year out basis. All of these trades are very interesting in nature, but they're trades, okay? They're trades. If you are more interested in investing, that's what we're talking about here. This is the asymmetric trading method. And again, we have had a lot of track record now of up markets, down markets, sideways markets. We tend to outperform the markets in all of those markets, and we do it at less risk. So if you are interested in our live trading room, that's fine. You can go to tradelivewithus.com. We're in there live trading every single day. If you're more attuned and more looking for something that's passive in nature, something that only takes 5 minutes a day, something that you set it and forget it, and you walk away from the computer, and you are looking for more long-term growth and investing rather than trading, that's the ATM program. You can go to tryatmforfree.com and take a look at that. And we talk about the power of asymmetric investing, long-term growth potential, and what that can do for you, and can it really be something that is truly life-changing for you. I really do feel like our ATM investing program is in fact life-changing. You know, I started this again about 2.5 years ago with $25,000. It's grown to $70,000 now. A $70,000 account growing for 10 years at 30% annualized rates of return, which is what we are on track for right now over a 3-year average rate of return period of time. It's about $1 million. You know, it's hard to foresee where you will be and what will be happening a decade from now, 10 years from now. But I think if you told most people, hey, if you invest $70,000 today, there's no guarantees, there's no promises in the marketplace, but you're going to have a really good shot at turning that 70 grand into $1 million. And I think most people would say, hey, that's something that I want to take a hard look at. So that is basically our ATM program. That's our results through the month of May. We're hanging right in there with the returns of the stock market, and the stock market is absolutely on fire so far this year, and we're hanging right in there. So again, I'm very, very appreciative and happy of the results that we've had with the program over the last several years, and I think that we're probably in a good position right now going into the second half of this year to hopefully be able to accelerate a little bit ahead of the marketplace, as we feel like the stock market is maybe a little bit overstretched to the upside here, and we might start to get a little bit better benefit from some of our short positions going into the latter part of this year. So if you want to come check out what we do from an asset allocation model, again, you can go to tryatmforfree.com. You get two free weeks of trial there with no cost or obligation, and then you can do a Zoom with me if you like, and we can go over the strategy more in depth. I can answer any questions that you have. So thanks, guys. That's our May update for the ATM investing program.